Hi everyone, welcome to the audit classes. In this class of ethics, professional responsibility and general principle, the main topic we'll be discussing is nature and scope. In that, the subtopic of this video is other engagement part 1. Reminded, this is part 1. We have part 2 as well coming just after it. Please do not forget to check out the part 2 as well to ensure the completion of other engagement. Let's dive into the first part of other engagement.
So other engagement are non-audit engagement. Non-audit engagement which include, let's say, preparation of financial statement or compilation of financial statement. So there might be a position where company may appoint you to prepare their financial statement, or they may ask you to issue a compilation report. So in that case of scenario, you need to follow SSARs, Statement of Standard on Accounting and Review Services, right? Statement of Standard on Accounting and Statement on Standard for Accounting and Review Service. Keep in mind why I am reiterating these things. People get confused between SARS and SSA. This is very much important to mug up, or maybe to fix in your permanent memory. Otherwise you will get confused in the examination time, right? For the review engagement, for compilation engagement, you will be following SARS. But for attestation and examination engagement, you will be following SSA. Who issues SARS? Do you remember who issues SARS?
SARS issue
AICPA, which body of
AICPA, right?
Yes, which body of AICPA?
Auditing standards issued by AICPA, ASB board, I suppose.
ASB issue auditing standard.
Auditing standard board, right.
Right. ARSC, Accounting and Review Service Committee, issue SARS. Accounting and Review Service Committee issue
SARS.
And ASB issue GAAS. ASB issue GAAS, right? And Attestation Standard Board, ASB issue SSAEs, or examination. Right? So connect these three dots, right? ARSC issue SARS, ASB issue GAAS, and Attestation Standard Board issue SSA, right? This is what it is mentioned here. SARS issued by ARSC. Shall I mention in detail here?
No, it's fine.
Or maybe in your notes you can mention SARS is issued by ARSC. So review of financial statement is being followed SARS, right? Attestation engagement, we will be following SSAE. What is SSAE? Statement of Standard on
attestation engagement.
Attestation engagement. Absolutely true. And that has been issued by ASB, Attestation Standard Board. So non-audit engagement include preparation or compilation of financial statement, review of financial statement, or attestation engagement. Right? For compilation, review, you will be following SARS issued by ARSC. For attestation engagement, you'll be following SSAE, which is issued by ASB. Right? Yaad rahega?
Yes.
Sir,
attestation engagement होगा, उसमें ARS होगा, examination और review में.
Attestation के अंदर क्या होता है? Examination, review or agreed upon procedure, right? That is for financial statement, line item, class of transaction, or disclosure. But when it comes to review of financial statement, you need to follow SARS, right? So far so good,
right? Yes.
Okay, so now come to the SARS. SARS has three sections: 60, 70 and 80. So section 60, this give a general principle. General principle like complete overall financial reporting framework under the SARS. So review framework. it will give you review framework, and it will give you the management responsibility. Management responsibility क्या होती है? Design, implementation and maintenance of internal controls over the financial reporting. Second is prevent and detect fraud and non-compliance with the law and regulation. Third is fair presentation of financial statement in accordance with the financial reporting framework. So this all comes under section 60 of the SARS. Section 70 of the SARS says preparation of the financial statement. So when you have preparation engagement or compilation engagement, preparation engagement, that means from the trial balance you are preparing the financial statement for the management, but you are not issuing any compilation report. You are just preparing the financial statement. So there is no audit requirement, no report requirement, no assurance requirement, even though no independence requirement, right? If you are preparing the accounts for the management, there is no independence requirement, and no test of detail requirement, except when CPA is also providing the following service. But when CPA is providing the following services, then they need to be an independent, and they need to perform the respective procedure which is required. Like if the CPA is giving audit report, review report, compilation report, submission to the tax authority, conjunction with litigation or business valuation, in that case of scenario, they need to perform the required procedure according to respective standard. But if they are just giving the preparation services, then there is no report required, no assurance required, no independence required, no testing required. Section 80 is compilation engagement, in which you will be issuing a compilation report. That means you have prepared or drafted the financial statement in compliance with financial reporting framework. That can be US GAAP, that can be IFRS, or that can be a special purpose reporting framework. In that you will be issuing a compilation report. But there is no assurance. You are not giving any assurance. If you are not giving any assurance, then no testing is required, right? But what all things you need to keep in mind? Prima facie, financial statement should not look materially misleading. This is your responsibility, that prima facie financial statement should not look misleading. And CPA has not come across any instance of fraud or material misstatement. So these two things you need to keep in mind. Upfront, financial statement should not look misleading, and you have not come across with any fraudulent activity or any instance of fraud or material misstatement. If you see upfront, like financial statement which you have compiled is misleading, then you will be giving into the report. If upfront it comes into your notice any fraudulent activity or material misstatement, then you will be communicating to the management. If they agree to correct it, that is fine. Otherwise, you will be reporting it in the compilation report. Make sense? SARS. SARS has been used for what? Review engagement and compilation engagement, right? When we use SARS, compilation engagement and review engagement, right? And what all guidance SARS provides? General principle, reporting framework, management responsibility, right? And in compilation, what all things as an auditor, as a CPA, we need to keep in mind. That all guidance come under section 60, 70, and 80 of the SARS. Make sense?
Right. Right.
Now coming to section 90, which is a review engagement. Review engagement. So section 60, 70, and 80 are 60 is of general principle, 70 is for the preparation of financial statement, 80 is for the compilation engagement. Section 90 is for the review of financial statement, right? This is not attestation engagement. This is review of financial statement, complete financial statement, right? Limited review, quarterly review, half-yearly review, which we do, right? In that case of scenario, we provide limited assurance. And for limited assurance, two procedures are mandatory. One is inquiry procedure, Second is analytical procedure. Inquiry procedure, that means you are doing the inquiry with the management, inquiry with the lawyers, inquiry with the banks if needed, right? But you are not taking any confirmation, you are not taking any document, you are not verifying any document, right? Unless you have any suspicion that there might be any risk of material mistake, right? So two mandatory procedure for the review engagement. One is inquiry, majorly inquiry with the management, right? Inquiry with the team members, inquiry with the client, inquiry with the leadership. Second is analytical procedure. What is analytical procedure? Can anyone explain what is analytical procedure? Has any of you done limited review, quarterly review? Any idea what is analytical procedure?
So maybe I can try. So is it regarding something regarding analytics on the entire account?
Yes.
Maybe if you are checking revenue or accounts payable or fixed assets towards the interim or maybe towards a roll forward time, and we are checking whether our revenue account is working fine. For example, if revenue is correlated to the receivables and receivables are correlated to the cash. So something like that.
Yeah. So it includes both, like overall analytical procedure as well as disaggregated analytical procedure. So overall analytical procedure at financial statement level, where like you are comparing current year profit and loss account with the previous period profit and loss account, and you are saying like what is the variation? Are those variation in line with your expectation or not? And are those variation material to the financial statement or not? If those variation are material to the financial statement, then you will be performing inquiry procedure with the management. Why, let's say, sales has been changed from this much amount to that much amount? Why purchases has been changed from this much amount to that much amount? Why expenditure has been changed from this much amount to that much amount, right? Same way in the balance sheet, why cash balances has changed from previous period to this period so much? Why receivable balance has been increased or decreased? Why payable balance has increased or decreased? Why fixed assets has been increased or decreased, so on and so forth, right? That is called variance analysis at the financial statement level. Then second analytical procedure comes at a financial statement line item, like we discussed in the last time also. For example, sales. For the sales, you'll be doing month-on-month sales analysis, right? You'll be doing product-wise sales analysis. You'll be doing product-wise separate and service-wise separate analysis. You'll be doing geographical location-wise separate analysis. That is called disaggregated analysis, right? So once you perform all those analytical procedure, so there are certain questions comes, right? Which is like, you can say, abnormal variation, or the variation which is not in line with your expectation, or which is more material to the financial statement, right? To those variation, you do the inquiry procedure with the management. Why, like month on month sales has been changed, month on month payroll expenditure has been changed, why the sales is not tying with the receivable, why collection is not tying with the receivable. So those kind of inquiry procedure are required to be performed, mandatorily procedure required to be performed when you are performing a review engagement. In review engagement, you will not be doing test of detail, you will not be doing inspection procedure, you will not be doing confirmation procedure, you will not be doing observation procedure, but you are doing some procedure. Some procedure include inquiry procedure and analytical procedure, basis which you will be giving a limited assurance, or you can say a negative assurance, right? What are the procedure not required to perform when you are doing a review engagement? So student most of the time get confused. Like in exam, in multiple choice question, they will give you are performing a review engagement, and to perform the review engagement effectively, what all procedure you need to perform mandatorily. So in option 1, they give you understanding from the walkthrough or test of control. And second option, they will give you inspection, observation, and confirmation procedure. Number 3, they will give you inquiry and analytical procedure. Number 4, they give you all of the above. So you need to select the best right answer for the review engagement. In the review engagement, the third answer is the best right answer, in which you need to perform the inquiry and analytical procedure. Right? Make sense? So in review engagement, what all things you are not required to perform?
A review में सिर्फ review ही रहेगा, right? We are not going to deep dive into each and everything, right?
Yes. So in review engagement, what all things you are not required to do?
So basically, the substantive part, I would say.
Yes.
We're not covering that area. We're not covering walkthroughs and controls and all that stuff.
Yeah. And what mandatorily you will be doing in review procedure?
Inquiry and your analytical procedures.
Inquiry and analytical procedures are mandatory. So if you go back to this definition thing also, here if you see in the last, here, if you see what is required to be done in audit or in review engagement is only inquiry procedure and analytical procedure. Right? No confirmation, no verification, no inspection, no observation. Even no walkthrough, no test of control, no risk assessment, no test of detail. Right? Only you need to perform inquiry and analytical procedure. So here, like students sometimes get confused whether they need to perform the walkthrough or not. Right? In review engagement, no walkthrough is also required. Make sense?
Yes, sir. Got it.
Let's try some question.